Breaking news. The Canadian dollar defies expectations and stages an epic comeback against the US dollar. The US or CAD pair is trading in the 1.3 to second during the US session on Friday. The CAD bounces back like a champion after US non-farm payrolls data falls short of expectations, but only 209,000 vacancies were filled in June, compared to the expected 225,000. The US unemployment rate hits exactly as expected at 3.6%. However, the modest increase in employment suggests less inflationary pressure. And guess what? The US Federal Reserve might just take a less hawkish approach. Meanwhile, up north, the Canadian employment data swoops in to save the day, with an astounding net change in employment of 60,000 compared to the forecasted 20K. The CAD says, "I got this." Then here comes the unemployment rate unexpectedly rising to 5.4% when it was predicted to be 5.3%. The CAD receives an extra boost from surging oil prices, Canada's premier export. The US is on a summer vacation driving frenzy, demanding more oil. The Energy Information Administration reports a fall in US stockpiles for the second week in a row. In all this chaos, let's take a quick look at Canadian dollar technical analysis. The US or CAD pair has been on a long-term uptrend, but it's time for a plot twist. The recent measured move pattern suggests that the CAD is about to begin a new cycle higher. What are your thoughts on this? Leave a comment. Don't forget to smash that follow button for more updates. Wikifx, a global broker regulatory inquiry app. See you soon.